Let's get talking now. Stears, a leading economic analysis and data-driven insights provider, has called for proactive measures to safeguard the nation's economic stability from inflationary pressures in 2024. In its 2024 African Output Report, it noted that Nigeria is currently grappling with high headline inflation rate, and the Central Bank of Nigeria is expected to continue with its tightening policy in the near term to address the inflationary pressures effectively. For more perspective on this, I'm being joined live in the studio by a senior economist at Stears, Mrs. Dumebi Oluwole. Thank you so much, Dumebi. It's good to have you on the program.
Thank you so much for having me.
Yes, interesting stuff. But I saw that report, like I said earlier, behind the cameras. Great work, I must say.
Thank you.
But let's start with the projected growth figures and what we have seen across the board.
Yeah.
How feasible is this considering all the challenges, not just domestic, global ones?
Yeah. Thank you for saying across the board. So we'll actually start across the board. Start by looking at Africa's projected growth rate and how that trickles down into Nigeria. So for starters, Africa's growth, we're projecting a growth rate just still alongside what the IMF is projecting and what the African Development Bank is projecting. Okay. So Africa's growth rate is projected around 3 to 4%. Yep. And this growth rate projection is actually centered around the growth across the continent. So we try not to look at Africa as a country, okay, ensuring that we take into considerations the uniqueness and the various characteristics and also policy interventions in various other economies and how that feeds into Africa's growth. So starting from like 2023, where the global economy did face a turbulent period from global monetary tightening, inflationary pressures. Yeah. All of this fed into Africa's economies and then fed into the entire outlook for the region. So that's why our outlook for Africa is quite conservative, though still optimistic. Then now looking at the various regions that are feeding into this growth outlook for Africa, because even though it's a bit conservative, it's still better than what we projected for 2023 and even what has happened in 2023. So the bright spots in Africa right now at the EAC region, that's the East Africa community. Yeah. We're also seeing some bright spots in the Central African region, and we're also seeing some countries in West Africa take the lead there, and a perfect example there is Ivory Coast. But speaking on the East African community, we're seeing countries like Kenya, Rwanda, and Tanzania actually maintaining their stellar growth rates. Wow. Yes. For Kenya, Kenya has a Eurobond repayment for 2024, and still we expect the country to maintain its growth rate of around 5 to 5.5%. This is because we're seeing a rebound in the agricultural sector and tourism sector, and the growth in the tourism sector, we see that spreading into the other countries in the region. Then looking at the Central African region, we've seen an increase in investor appetite towards that region, simply because some of the countries there are beginning to revamp their oil and gas sector, the natural gas sector, their extractive industries, and the general manufacturing industry. So we're seeing a lot of the governments there being proactive in terms of boosting the value chain of the agricultural sector and harnessing more of their mineral resources and agricultural commodities. Then for West Africa, Ivory Coast is just a shining light right now. Yes, even though they're right now they're also trying to venture into the Eurobond market. Okay. That's the first of that nature since 2 years ago, since the international capital market has been shut to African countries. So clearly, Ivory Coast, we're expecting Ivory Coast growth rate to actually be above the general Africa's growth rate and the entire Sub-Saharan African region's growth rate. So Ivory Coast is projected to grow at around 6 to 6.5%, and that's a very strong growth rate for a West African country. Now looking at Nigeria and South Africa, which are the dominant economies in Africa by GDP. Yeah, we expect exactly the big goons. Yeah, so Nigeria's growth rate is still expected to be sluggish at around 2 to 2.5%. That's the average growth rate for 2024. Wow. And the reason why we expect this is just coming off the back of the reforms that Nigeria has undertaken. So these reforms will definitely will continue to stifle consumer spending and also the output from businesses. But towards the second half of the year, we might see things pick up a bit. For South Africa, still expecting sluggish growth rates, underperforming the SSA average growth rate for the region simply because of its lingering power crisis. And they are also There's also the risk premium for its political instability, simply because of the elections that are coming up somewhat later in the year. So that's the overall outlook, yes, for the growth rates for Africa and specific countries in the region.
Brilliant. But let's stay home before we now look at what's happening. Many would say the CBN is yet to come out with a blueprint of what really the direction of the monetary policy would be. We're yet to even have an MPC meeting. We hope that date will come up anytime soon. But what's your expectation really? What are you expecting from the Cardoso-led CBN?
Yeah, to be very honest, we expect a strict reversal from what we've seen in the past 8 years. Yeah, so the CBN in the past 8 years, or almost even a decade ago, was very unorthodox in its approaches to liquidity management and price stability measures. So we're expecting that the CBN this time around, under the new leadership, will be quite different from what we've experienced before. And even though we haven't yet seen a blueprint, like you rightly said, on the CBN's monetary policy direction, we have seen signals that the CBN is going to be significantly different this time around. For one, we've seen the CBN remove the $2 billion cap on standard deposit facility for banks. We've also seen the removal of the import restrictions for some for some commodities. We've also seen the CBN allowing automobile rates to significantly increase. Towards the MPR, we've also seen treasury bill rates also increase significantly from where they were before. And we're also seeing, like you also mentioned, one of the highlights today, the CBN is actively clearing the FX backlog. So even if we haven't heard an official announcement that this is what the CBN is doing, we've heard some level of commitment from the CIBN speech. CIBN speech, and we're also seeing the CBN make these moves, I would say underground and also somewhat publicly, to signal positively that it's going to be orthodox. But the key thing here for monetary policy is that we find, or the CBN actually maintains the dollar inflows into the economy to stabilize the exchange rate, because we've seen over time that currency depreciation is the anchor right now, is the umbrella of which all things are somewhat falling apart in the economy. It's affecting businesses, and that as well is increasing prices and squeezing consumer demand. And the reason why this is significantly important is because the longer we waste time to address Nigeria's lingering issues that are affecting commodity prices and the general economy, the easier it is for speculation and speculative attacks to continue, and investors being disincentivized. We need as much dollar inflows as we can get into the economy, and that starts by positively anchoring investor sentiment. So what the CBN is doing, without outrightly saying this is what we're doing, is somewhat positively anchoring investor sentiments. But the moment they make that announcement, hopefully they have their meeting towards the end of this month, and then there's a clear direction on where they're going. So that's where we see monetary policy for now. Let's
move to Kenya and understand the macroeconomic issues around that space that will shape the year. There's been bold steps by the president too. What are you looking at in that space?
I mean, for Kenya, it's just the Eurobond. The Eurobond repayment for 2024 is significantly reshaping Kenya's macroeconomic landscape. Everything right now, at least for the first half of the year, will be definitely tilted towards ensuring that that repayment happens. And it happens at the time it's supposed to happen, including the interest payments on that bond. The significant thing here is just off the news today, the IMF has concluded another review on the Kenyan economy, and is and has agreed to support the country further with additional dollar inflow. So that as well will support the country's Eurobond maturity. We expect Kenya to meet that Eurobond obligation in June 2024. But before that happens, we still expect currency pressures to persist in the Kenyan economy, at least up until the Eurobond is paid. Right now, Kenya's currency, at least between 2023 and as of today, Kenya's currency has already depreciated year to date about 23% against the US dollar. And this has been a 2-year losing streak for the country. That's since 2022. We expect that to continue at least until the Eurobond is paid. In terms of inflation, we see inflation tapering out for Kenya. Thankfully, Stears inflation forecast has been quite accurate for predicting Kenya's inflation. we have three scenarios: the baseline scenario, the BS scenario, and the bull scenario. And Kenya's inflation has consistently remained within our baseline and bull scenario, meaning that inflation has remained within the CBK's, that's the Central Bank of Kenya's inflation target of about 5 plus or minus 2.5%. And we expect that trend to continue throughout the year because food inflation, we expect it to also taper because the agricultural sector is rebounding, and we also expect dollar inflows to keep coming in for the country. So that is one of the things that is feeding into Kenya's inflation prospects. It's quite optimistic, and we expect that to actually happen. Then in terms of growth rate, like I mentioned earlier, Kenya is one of the bright spots for the East African community. It is the gateway for even venture funding towards the East African community. We're seeing a lot of countries and a lot of investments towards Kenya. We expect that trend to continue. Kenya's growth rate is expected at an optimistic 5 to 5.5% for 2024.
Now, what do you think will be the trend of global consumer spending, of course, in sub-Saharan Africa and the global economy?
So for the global economy, so I'll break this down into the global SSA and then for the various countries. Okay. For the global economy, we expect a rebound in consumer spending, simply because the global economy is rebounding. For instance, inflation in the US has significantly reduced, closer to the US Fed's target of around 2%, even though it did increase in December, but we attributed that to festive spending. Of course. So we generally expect the economy to rebound. The UK as well is seeing a significant slowdown in inflation, from around about a 41-year high of about 9% or even 10%. In 2022, inflation is down now to about 3.9% in the UK. Same thing for China as well. We're seeing that consumer spending in China could somewhat pick up, even though China is still facing its fair share of challenges from its property sector crisis. But generally, the outlook for the global economy is positive, and we expect that trend to continue. So we're going to see a rebound in consumer spending. But for consumers globally, housing, food, transportation will take a huge chunk of consumer spending, take a huge chunk of the consumer basket. Now coming to Africa, or sub-Saharan Africa now, we expect consumers to still remain very price conscious, simply because prices are still very elevated. Even though we expect inflation to somewhat reduce, the IMF projects sub-Saharan Africa's inflation to slow down a bit, about 13% from 15.8% last year. But still, commodity prices are still high in various countries. So meaning that consumers will still remain very price sensitive and very price conscious. Now coming into Nigeria, it's pretty much the same as the sub-Saharan consumer. Consumers will definitely continue to prioritize consumption on food, basically for survival, just to ensure that they are able to stay within their budget constraints and their lower disposable income. But the significant thing here for African consumers and Nigerian consumers is that they're actually split between two spectrums. That is the upper income consumers, those are consumers that are earning about $10,000 to over $1 million annually, and then you have the entry level consumers, and that includes people that are earning less than $10,000 annually, and a floating class of people earning about $2 to $4 on a daily basis. So on a monthly basis. So basically, it just simply means that most of Nigeria's consumers are still fixed into that entry-level category, and we'll see them exhibit these characteristics of trying to make sure that they balance their spending to focus on the necessities than spending on luxury items. But for the upper-income consumers in Nigeria that have consistently lived above the spending threshold, we expect them to maintain their consumption for luxury items. They remain brand loyal. But then again, a significant thing that is changing in that consumer class is that their spending on food items would actually increase. So if in their consumer basket, they usually would spend maybe 30% of their income on food. Now that has increased about 40% or 45%. Yes. So just a hypothetical example. But that's pretty much it for the consumer landscape.
But where are the opportunities now? Because in all of this, there's still opportunities.
Of course.
Where do we have these opportunities, and how can we take advantage of them?
Yeah, so like I mentioned earlier, the opportunities in Africa still exists largely within the East African region. Nigeria as well is a bright spot in terms of the reforms that we've taken place. So that is a key thing that has happened and put Nigeria on the map for, or on the landscape for investors to, significantly watch out for. And one of the things that has prompted this somewhat optimistic outlook in terms of the investment climate is the increase in Nigeria Stock Exchange. If you notice that there was a significant rebound in the equities market, one of the best performing globally, and so clearly meaning that there is somewhat of an incentive for investors to rebalance their portfolio in favor of developing economies and emerging markets like Nigeria. The other bright spots are the fact that we're also expecting that the global monetary policy easing would probably start towards the end of the year, and that might, push investors to, reconsider the emerging markets and developing economies that they always usually favor for higher yields. And again, Kenya is one of the bright spots here. Ghana as well has received some green light because of its IMF standing, sticking to the reforms. So that's a bright spot that we're also looking at as well. South Africa too, simply because they're already undertaking the necessary steps to address the power crisis. South Africa is one of the relatively stable economies in Africa, and that is not going to change in 1 year. So there are still some bright spots for that for the country as well. So generally, it's just that generally, if you're going to pinpoint the brighter spots amongst everything I've mentioned here, is still within the East African community.
The energy market is very important to watch out. We need to see what's happening, especially now, the transition thing, gas and all of that. So where do you see that, considering even the wars in Ukraine and all of that, where do you see that market? How do you see it performing in 2024?
I mean, looking at it from the global standing with the events that are currently happening, clearly there is some sentiments for oil prices to remain bullish, at least for the first quarter of this year, because of the war that is happening now, the Houthis issue, the Red Sea crisis, the lingering Russia and Ukraine war, and general supply shortages from OPEC. Now Angola has exited OPEC, so OPEC's global contribution to oil supply has also reduced, and still the cartel remains very conservative to try to keep oil prices at around $80 per barrel. So generally, the sentiments towards oil prices, at least for the first quarter of the year, is that prices would remain high. And what this means for Nigeria, especially looking at the crisis, it's twofold. So there's the impact of oil prices on the Nigerian economy and the impact of the supply chain disruptions that are ensuing due to the Red Sea crisis and also even the Russian-Ukraine war towards the Nigerian economy. So looking at the oil price impact, with higher global oil prices, there's a possibility that Nigeria could earn more in terms of revenue, simply because it's an oil producing country. We should be able to generate more income with global oil prices trending higher. However, for Nigeria, Nigeria's revenue and generally the income that we make from crude oil sales and exports is it's more sensitive to changes in Nigeria's oil production than prices. So if we have oil production trending lower, chances are that we will not be able to take advantage of higher global oil prices. And we've seen this happen. This happened last year when countries like Angola and Saudi Arabia were raking in so much profit due to oil prices being higher. Nigeria did not have that testimony. But we're expecting things to change, but in a very gradual way. We're also seeing like oil production trending higher, but then again, it will be a very gradual process. Nigeria's oil production might still underperform OPEC's quota of the now revised quota of about 1.5 million barrels per day, at least for the first quarter of the year. But generally, if we do make money in terms of Naira terms, we would see FAC disbursements. That's the amount of money distributed to state governments, local governments, and also the federal government. We would see that increase in Naira terms. The trend has been happening since 2023, and we expect that to continue in 2024 in Naira terms. Then when we look at the supply chain disruptions, Nigeria is still quite import dependent for quite a number of commodities like wheat, and we expect that trend to continue simply because by template and by experience, we've seen that when global supply chain disruptions happen like this, especially with the Suez Canal that did happen in 2021, global commodity prices, especially grains like wheat, millet and all of that, tend to trend high, and also edible oils. And Nigeria is a large importer of those commodities. So with those prices trending higher, we would see imported inflation probably increase because our import bill has also increased. That would filter into other derivatives for certain products like wheat, like bread, pasta, noodles. The prices of those commodities could trend higher.
Oh, finally, our time is fast spent, and I'm so enjoying this conversation. But let's wrap up with the financial sector stability.
Yes.
You know, everybody wants to hear about that. What's happening in that space, and what are you thinking? Is there any cause for alarm?
Yeah, so disclaimer, I'm not a financial services expert.
I know that.
But then again, the general outlook for there is was still quite optimistic about the financial services sector, especially for banking. We know that one of the reasons why the NGX was was one of the best performing globally is because of the banking sector.
True.
So we expect that trend to continue, especially with the fact that, like I did mention, we're expecting a more orthodox monetary policy, and that should definitely filter into the financial services sector, especially with, and now we're also seeing like fintechs also brooding.
Yeah.
There are some bright spots there as well for Nigeria and even Kenya as well.
We hope to have you on the show anytime soon again. Thank you so much.
Thank
Really
you so
interesting
much
having you
for
on the show,
having
Mrs.
me.
Dumebi Oduwe. Let me get a handshake there.
Thank
you. That was a good one. She
you.
is the senior economist with Stears. Thank you for breaking down this very beautiful document, well detailed.
Thank you so
Enjoy
much.
the rest of your day.
You too.
All
Thank
right,
you.
there. Coming up on the show, let's move